Investing is fun, investing grows your wealth, but investing can be very, very risky. And that's why in this video, I want you to understand some of the risks that comes with investing. We all know that when you invest in stocks, the stocks goes up and it goes down. And when it goes down, especially, a lot of people have anxiety. They want to pull their money out. But investing is a long-term game for a long-term reward, and that's why you need a bit of patience. However, in order to mitigate the risk of some of the individual stocks going up and going down, you may want to look into ETFs. ETFs are called exchange traded funds. Now, what are ETFs really? These are simply a basket of stocks. So look at it like a basket that holds multiple stocks, multiple top company stocks, by the way. So you have ETFs for the S&P 500, you have ETFs for technology stocks, you have ETF for the UK market. You cannot go wrong with ETFs, and I'll tell you why. Buying, like I've explained, ETFs are a basket of stocks, and that's how I can explain it to you in simple terms. Buying a basket of stocks ensures that whenever one stock in that basket goes down, which should have caused you anxiety, other stocks may go up, which balances out. So you can see that with an ETF, you are covered because your risks are mitigated. Your risk becomes lower than expected if you had bought an individual stocks. Now, why it isn't bad for you to buy an individual stocks? I'm talking about ETFs because you have to understand the kind of investor that you are. If you are a conservative investor or a balanced investor that wants to get into the stock market, ETFs, which are exchange traded funds, might be the best way for you to go because it minimizes the risk of the volatility that you would have ordinarily gotten if you have invested in individual stocks. You have the VOO ETF, for example, that tracks the S&P 500. So this is an ETF that tracks the top over 500 companies in the United States. So you have all your Amazon, you have your Google, you have Microsoft, you have all these stocks, all the top performing companies, the top 500 at least, are being tracked by this ETF. You can buy an ETF, especially if your brokerage offers fractional shares. You can buy an ETF for the fraction of the amount that one should have gone for. For example, you can see VOO going for maybe over $600, for example. If your brokerage actually offers fractional shares and you have just $100, you can actually buy that same stock, that same ETF for $100, which means with $100, you own a share in all the multiple top dollar, $1 million companies. And that is super cool, my friends. That is really cool. There are other ETFs, for example, like QQQ that tracks the technology sector. So all the companies in technology like NVIDIA, Microsoft, the top companies, right? This ETF tracks them. And sometimes it performs better than the ETF that track the S&P 500. With an ETF, you get a good return. You could get up to 10 to 12% annually with an ETF. And historically, they have shown that they can provide this. Now, remember, the S&P 500 historically have given 10 to 12% every year for the last 30 years. QQQ, for example, have given a little bit more than that in the last 5 to 10 years. So it's not a bad investment for you to make. Obviously, the choice is yours in terms of what your risk appetites are and what kind of investor you are. But I just want to let you know that it's a lovely way and a nice way to mitigate your risk. And it's even better because you don't own one company, you own multiple large multinational companies. And that, my friend, is a good way to invest. And let's not forget, other than the capital appreciation of the shares that you buy, which is an ETF share, ETFs also pays out dividends. Some ETFs pay out dividends, which is an additional source of income. We all know that passive income is the way to go in 2025, so do not snooze or you would lose. Go ahead and get yourself an ETF and watch your money grow as well as get extra income from the dividends that these ETFs pay. And notice, you cannot walk and save your way to becoming wealthy. If you want to become wealthy, you need to invest. Investing is what the rich do to make them wealthy. And if you want to be as wealthy as they are, then you need to invest the way they invest. And these investment tools and vehicles and tips that I'm giving you are one of the ways you can actually become wealthy. Your future you is counting on you investing to become wealthy so you can retire better. Your kids are counting on you to invest better so they can become rich when they grow up. Your generations are depending on these little decisions that you make. And I'm telling you for free, investing is the surest way for you to start and build your wealth journey. My name is Nelson, and I talk about investment, budgeting, savings, personal finance, and anything literally you need to become a better person. So please like, follow me, and share my videos so you can get more of them when I upload them. Until my next video, stay safe and stay blessed. Bye.